Now let's proceed to the types of ledgers. So we have the general and the subsidiary ledgers. A ledger is a book that provides a classified record of accounts with their respective running balances. So we have two types. We have the general ledger and the subsidiary ledger. The general ledger is the primary accounting record of a company that uses double entry bookkeeping. It is divided into two sections. We have the debit and the credit. Meanwhile, the subsidiary ledger is a group of like accounts that contains independent data of a specific general ledger. So to illustrate, we have this general ledger for accounts receivable. So here we have the beginning balance. Okay, these are the columns. You have the items, the posting reference, you have the debit, and then we also have the credit side, and we also have the date, and then the item. Then we also have the account name, and then we have the account number. And here are the transactions for the month. So we have service income for June 15 and another service income for June 17. So why is this that service income is our description here? Because the transaction of the accounts receivable came from the provision of services. In its posting reference, you can find here GJ01, which means that the same transaction can also be found in the General Journal 1. And we need to post these transactions also to the corresponding subsidiary ledgers of the accounts receivable. So the reason for that is for us to identify who are the owners of those accounts, who are the customers who transacted with the company and promised us payment after we have performed the services. So that is why there is a subsidiary ledger. So it will provide the details of the accounts for a particular customer for the accounts receivable. We can also prepare subsidiary ledgers for other accounts. For example, we have the accounts payable. So the subsidiary ledgers will contain the specific accounts for each of our suppliers. So going back, for the accounts receivable, the subsidiary ledgers of the accounts receivable will provide us with the details of the transactions of our customers. So for this example, we have 3 customers that transacted with the company on June 15 and 17. So we have customer A, customer B, and customer C. So they have their beginning balances from the previous month. So we have for customer A, we have 2,500, and customer B, we have 1,500 for a total of 4,000. So that is our beginning balance. Then we have on June 15, so we have 13,000, which will be broken down to the 3 customers. So we have customer A, we have 4,200. Customer B, we have 5,800. And then we have customer C, we have 3,000 for a total of 13,000. Then on June 17, this 15,000 accounts receivable can be broken down into the 3 customers. So we have customer A for 1,200, for customer B we have 6,700, and customer C 7,100. And the total 32,000, the composition of this is 7,900 from A, then from B, 14,000, and from C, we have 10,100. So it is easier to trace the payments and also the recording of new receivables if we have the specific ledgers for each customer, which is the subsidiary ledger. So that is the purpose why there would be a need for subsidiary subsidiary ledger, since if we will just look at the general ledger, the amount there is in total, but we don't know if this is coming from one person or from two customers ba or three customers. So if we have the subsidiary ledgers, it will provide us with the details of the transaction for a given day or a given month. If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.